Joining us for more is Jessica Amir from Moomoo. Jess, welcome. The Trump pump alive and well overnight in the United States.
Yeah, absolutely, Nadine. So we're hitting fresh highs. I guess the thinking now is the US bull market is gaining fresh legs on the back of Trump's victory. Plus, of course, we had the US central bank cutting interest rates, hinting more is to come. But we've got to look at it in the big picture as well. It's not just about Trump, but if we just zero in on the bull run at the minute, we do have the market up 72% in 2 years. But of course, looking back at history, the average bull market, it's over 5 years long. So we've still got at least 2 years to go. And the market could potentially rally up 100%. But I guess this time is, I hate to say it, could be a little bit different, Nadine. And that is because we've got stocks really expected to benefit from tax cuts and Trump's all in all pro-business stance. But if we also just zero in on another factor, it's the breadth of the rally and momentum has only just started to really kick in. And now, Nadine, in the S&P 500, momentum is quite strong, and it's only just turned strong over the past 4 days. So it's a really good indication suggesting that if we look at the market's fear and greed gauge, it looks like momentum is going to potentially continue and more higher highs can be expected. Of course, I do keep an eye on price, because you'll probably start to see investors really question, if the market is too pricey in terms of a price to earnings perspective. I guess we do have to be mindful that, of course, markets don't move up in a straight line. It wouldn't be remiss to point out that we might be expecting a pullback at some point. Just don't know when that will be. But the minute it looks like stocks can continue to push on up.
Yeah, and we'll focus just on what's happening now, Jess, because obviously once the international policy of the new administration gains legs, which could be quite some time because they'll be focused on domestic policies primarily at the beginning, then we'll have questions about tariffs and inflation and all the rest that goes with it. But for now, markets seem to be really in a sweet spot, and you can't look at anything to really as a more real expression of the enthusiasm about this new administration in some markets than Bitcoin and Ether. Bitcoin continues to print those fresh record highs.
Yeah, it's just outstanding. I was speaking to a colleague. It's just a little beyond, isn't it? But the fact of the reality, or the fact of the matter is, we can't really fight Bitcoin's one-way highway run. So it's just taken out the $87,000 mark. Sure, bets are on for it to imminently hit $90,000. There's $2.8 billion, we were saying a couple of days ago. There's $2.8 billion in bets predicting that it will imminently take out 90K. The 100K level looks a bit boring for some. Standard Chartered says 125 is probably more likely to be on the money. But regardless of whatever you're betting or wherever you think it'll get to, the reality is that Bitcoin's probably going to face a serious supply squeeze if Trump does deliver in what he's saying, Nadine. And he's saying that he's going to buy Bitcoin, or buy a massive chunk of Bitcoin that essentially takes Bitcoin out of the market. Of course, we know that there's limited supply of Bitcoin, so that would cause supply to be squeezed, especially at a time when Trump is now saying that he might be adding Bitcoin to the government's strategic reserve, so holding Bitcoin alongside gold. So that is precisely why traders are betting that more high highs can be expected in Bitcoin. And then, of course, you've got every man and his dog, including the world's biggest investment managers, BlackRock. You've also got VanEck as well, going big on their calls on Bitcoin. So we heard from VanEck saying that they reckon Bitcoin will get to $300,000. And then, of course, BlackRock itself, they're buying or looking to buy a hedge fund that is a very large holder of Bitcoin. But of course, Larry Fink himself, he said that, Bitcoin is increasingly making a stake in investors' portfolios, and that's precisely what we're seeing. Bitcoin's amassed $1 billion in buys in the past week, 5.5 billion in the past 4 weeks. So it's just outstanding.
Okay, so we'll be watching Bitcoin in this Asian session. Jess, look, the Australian market, you've got to think it's going to come under pressure with the moves we saw in oil, overnight iron ore, copper, all down. That strong US dollar hitting gold as well. I mean, it's going to be pretty rough, you'd think, for some of those miners today.
Yeah, unfortunately, Aussies are now being hit with the reality, number one, that the Aussie share market is increasingly a stock pickers market. And we're seeing that with the gains um, primarily over the past 5 trading sessions. They've all been in tech, Nadine. And they've all been key beneficiaries or key benefactors of US rate cuts, and secondly, of Trump's pro-business stance. But second of all, we're seeing a lot of pressure, as you said, on those key commodity names. And this is going to continue for some time because we're only just seeing fund managers really start to accumulate the US dollar. And so coming into the US election, Nadine, we saw global investment managers were quite light on the US dollar. And now they're catching up. They're going, hey, wait a minute, what's going to happen once Trump does likely impose tariffs? What's going to happen once he maybe strengthens the breadth of, the average US business? What does that mean? Well, it means obviously more buying of US dollars. And so that is why we're really seeing gold under serious pressure here, plus aluminium, copper, you name it. You also mentioned iron ore, that's continuing to fall. So really seeing a lot of pressure pick up in these key commodity prices. And given that we are seeing increasing positions in the US dollar, it's really worthwhile reconsidering and maybe adjusting your portfolio, bunkering for more downside. We are expecting a lot more weakness ahead while we've got bond yields in the US dollar just continuing to march up on that one-way street.
Yeah, and so the companies that are likely to outperform will be those to benefit from the rate cutting cycle, because it's not all about Trump. It's still, a lot of it comes down to rates, correct?
Yeah, spot on. Absolutely. So really interesting to note that I guess it's not just tech stocks down under that have been doing really well. Zip, Megaport, Life 360, WiseTech Global, all these are key beneficiaries of rate cuts, but also, of course, of global trade. And that's why we're seeing vis-a-vis WiseTech Global move up to the upside. But the Megaports, the Life 360s, the Zips, obviously their sweet spot is the US. And they make a lot of their money from US businesses and the US consumer. So it really would be remiss if we didn't point out that there is probably more upside ahead for the Aussie tech darlings. The gains, of course, aren't as significant as we're seeing in the US. We're only seeing single-digit gains in some of these tech stocks. But if you are looking for more upside and you want to take on a little bit more risk, maybe it might pay to look at some of those smaller caps, but do expect more volatility down under.